Welcome, ladies and gentlemen, to Commodity TV here directly from Zurich from the Precious Metal Summit Conference, November 2025. And it's my honor and pleasure now to talk to Thomas Mumford, the president of Scottie Resources. Good morning. How are you?
I'm good. Thanks for having me.
Yeah, thanks for taking the time, of course. And I mean, at those gold and silver prices, everybody is happy who is in the in the resources space and in the mining, I would say. You guys have been, for quite a time, a exploration story. Now it looks to me that you guys really turn into development production story.
Yes.
So what was the highlight this year? Probably a
couple of highlights this year. So, I mean, the first one was we put out our maiden resource. So putting out 700,000 ounces at 6 grams a ton, a nice high-grade resource. We're uniquely situated on a road already. Oh. There's a deep water shipping port already down the road from us. We're very unique from that perspective. And then the next big boom for us was we've done a PEA now, shown the economics around that 700,000 ounce resource. And then the third one would be we've done a bulk sample this year. So 4,500 tons of ore that we've shipped down to the Port of Stuart, and we're just in the process of selling. So that'll be a net revenue positive. Basically, a mini version of our mine is this bulk sample.
Oh, fantastic. I saw also that you have certain scenarios, I would call it. One is direct shipping ore, the other one is conventional mining. Can you elaborate a little bit? What is the status today, especially with that bulk sample? Is that direct shipping ore already? So could you test that if it works? And or do you want to do the toll milling option? So
the bulk sample is essentially a mini version of our DSO project. So we blasted at site. It was an open pit, mined it out, separated ore from waste, and then we shipped it down the road. It was over 100 truckloads of material. So 4,500 tons, significant sized basically deposit that we pulled out of there and shipped down the road. And that's being shipped out and being sold overseas to Ocean Partners.
Okay,
so
super.
Same group that financed the last financing with us, and that has the offtake agreement for the mine project.
Okay, super. So that sounds like that you, maybe want to take the direct shipping ore version.
That's our base case scenario. That's how we, that's the risk reduced version of how we could operate. When we did the PEA, we showed the economics of toll milling through Ascot, which is it's a mine and a mill that's located about halfway between us and the port that we ship out of. So it'd be half the transportation distance, no shipping overseas, but they're having quite a bit of trouble. So we're not confident that the mill is going to be operating, and so the direct shipping ore gives us,
That's a free lunch.
That works.
Okay, super. Would that mean that you maybe say, okay, let's start with direct shipping ore, and then maybe later on we do our own mill, processing plant, etc.?
I don't think we ever build a mill.
Okay.
Yeah, it's either direct shipping or toll milling. It's scenarios of us building a mill is just, it's so timely, and the permitting associated with it. The ability to do direct ship ore and the ability to toll mill it to another facility are much better options for the way that we see it operating and going.
Super. So you must also not consider metallurgy really, because when you have direct shipping ore, you don't care, right?
We do have metallurgy already done, so we know that it'll be processed. If it was to be processed in a toll milling situation, it would be a cyanide leach would be one of the best ways to operate it. But within a direct shipping ore, you don't need to worry about metallurgy. It goes into a smelter.
That's the buyer.
Yes. So that's the risk reduction.
Super. Now today we have over 4,000. We are approaching already $4,100 per gold ounce, $50 in silver. I think we are $49.95 now. So can you give us some economics? Let's say $4,000 gold. What would your project look like? AIC, margins, etc.
Oh, I can't remember the $4,000 numbers.
Approximately.
I think we're in the $600 million market cap, NPV for that on the DSO, and we're over 800 with the toll milling option at over $4,000 gold for us. The ASIC I think is about 1,400, 1,450 for the DSO, and then it drops below 1,000 for a toll milling scenario.
Fantastic! Wow, those are great numbers, I would say. What do you still need to do to get to the ready production process? How much money do you still need to invest? And what would be like your capex to really bring that, even if you do the DSO stages? What does it mean?
So the capex to build it out is $128 million Canadian. That's coming from our PEA.
That's not much.
That doesn't matter if it goes toll milling or DSO. That's the same scenario for both of those. The big long lead time items for us to get into production is permitting. And the permitting is contingent on two things. One is baseline environmental studies, so which is about a 2-year study, which we started this past summer. And then the other one is to upgrade the resource from inferred to indicated category. And so we've also started that. So those are the two big long lead times. So we've got another 1.5 years of baseline studies, environmental work to do, and then another drill season to do to get up to that category.
Okay, super. Then the key question, are you financed for that?
We are not totally financed at that point, but we have eyes on how we would raise that money to get to that point.
How much money we are talking about?
We're talking about, a project in the order of $25 million, $30 million next year.
Super. And for the project finance, already any ideas? Could you do something like 70% debt, the rest equity, or how would that look like? Because you said you have an offtake agreement already.
We already have an offtake agreement. We have a 2% royalty on the project already. I think a debt structure would probably be the preferred, and something around a 70% to equity ratio would be
so
right
quite conservative.
Yep.
Super. So fantastic. Time-wise, if let's for a second consider everything goes the normal way as you have planned. When would you be in full production?
2028, in the summer of 2028.
Super. You have gold only, or also some byproducts?
There's a little bit of silver. It's a gold to silver is about a 1-to-1 ratio. For every gram of gold, we get about a gram of silver kind of overall in the deposit. So silver would be a minor byproduct on this, but that's really the only commodities that do produce.
No, at $50, that makes also money.
Sure.
That's not too bad.
Yeah.
Fantastic. Who are your largest shareholders? Who is in control?
So the
management, of course.
Yeah. So largest shareholder would be Ocean Partners. I think they're at over 10.5% of the company right now. Ross Beatty owns 5%. Brad, the CEO, he's got about 4%. We have a strategic advisor, Kevin Jennings. He owns 9-ish%. Eric Sprott has 4 or 5%. Those are kind of some of the major individual shareholders that I can think of.
So quite healthy that you are well protected, not to be taken over too early.
Nope, we will get full value here.
That's super. Last question, what is on your real wish list for next year?
Gold price continue to move up.
But we all wish that, that's for sure. And I can assure you we will see the 5,000 next year, don't worry. But what is on your wish list for the company?
Wish list would be finalizing the permitting pathway that we're going to use to get it permitted. There's a few different pathways, and I think we're close to narrowing down exactly what pathway that is. The other thing would be just, fantastic drill results. I mean, we're going to have our largest drill program ever next summer. And so...
How many meters?
I think it'll be over 30,000.
Good.
Yeah.
Fantastic. Yeah, then I would say good luck with the drilling, good luck with your wish list, and of course, please surprise us with good drill results again.
Well, I hope so.
And bring the baby in production.
Okay.
Thank you very much, Thomas. Great.
Thank you.
Yeah, ladies and gentlemen, that was Thomas Mumford, the president of Scottie Resources. Yeah, you heard it. That's another gold mine to be brought into production 2028. They want to be really fully in. And what I really like with the concept, you have direct shipping ore, but you have, if the case needed to be, you can also go conventional mining, and only $128 million for the development of the project. Ladies and gentlemen, that is nothing in the mining world. So that thing will come, that will be done. Check out the company. Thanks for watching us, and bye-bye from Zurich.